investors. I am REEMA DOMINIC from the Department of Professional Accounting and Finance of Christu Jayanti, deemed to be university. For today's video, we'll be talking about investment management, mainly about the fundamental analysis. We all are investors, right? We all do our own investments. We all do our own analysis for our investments. And the one main type of analysis we all do carry is the fundamental analysis. Fundamental analysis is the method of evaluating the value of stocks in depth. All the financial and economic factors of the stock is analyzed to evaluate the value, to find out the fair market value of the stock, so that we can make an informed decision whether to buy that share, whether to sell, or whether to retain. So for making that informed financial decision, this in-depth analysis is mandatory. Fundamental analysis is actually determining the intrinsic value of the shares by looking into the macro and microeconomic factors. So in this type of analysis, investors will be mainly looking into all the factors relating to that investment, which includes macroeconomic factors like economy, industry, market share, and also microeconomic factors like business policies, management, the profit earning capacity of the company. All these factors will be looked into, and certain formulas will be applied by the investors, and they will find out the intrinsic value or fair market value of the share. That intrinsic value is compared with the actual market price. That comparison is the most important step. For example, if we say that according to our analysis, we got an intrinsic value of 1,800 for a particular class of share. That share is priced only for 1,400 in the actual market. Actual market price is only 1,400. According to our analysis, we got 1,800. So is that a good share or bad share we can invest? For me, it's like a very growth prospective share which I can invest, because according to my analysis, the worth of the share is 1,800. So that's how we will find out whether the share is underpriced or overpriced, and we will make informed decision based on our analysis. So that's all about fundamental analysis. Coming down towards the approaches of fundamental analysis. While doing fundamental analysis, we can either follow bottom up approaches there, top down approaches there. So top down, when we say about these approaches, we have to say about the basics of fundamental analysis, which is EIC framework. That is the major basic of fundamental analysis. This EIC framework: economy, industry, and the company framework. So in the top down approach, investors will be starting from the economy, which is the broader perspective. Then the investor will be coming down towards the industry factors, industry related factors, then towards the company related factors. That is a top down approach. Then the other approach is the bottom up approach. From in the bottom up approach, investors will be starting with the company specific factors, then he'll be moving towards the industry specific factors, then finally the economy related factors will be studied by the investors. These are the two approaches which is followed in the fundamental analysis. Then moving towards the category or the main types of fundamental analysis which the investors follow is quantitative analysis or qualitative analysis. Quantitative and qualitative. As we all know, quantitative is related to numbers. So in quantitative analysis, investors will be looking mainly into the quantitative side of the company's revenue, profit margin, financial ratios, future growth potentials of the company. All the numerical factors will be studied in the quantitative analysis or fundamental analysis. Then the qualitative side, and the qualitative side will be looking into the long-term potential by examining non-financial factors, that is qualitative factors like management experience and performance, corporate governance, industry's competition which the companies face, the business model followed by the company. All this qualitative factors will be studied for understanding about the qualitative factors, and this all together will form as the fundamental analysis of the investor. Then talking about the main basics of fundamental analysis, which is EIC framework. EIC stands for economy, industry and the company. Economy analysis, industry analysis and the company analysis. These are the three main parts of fundamental analysis. So in economy analysis, the investor will be looking towards the global and domestic economy. All the factors in the global and domestic economy will be looked into. For example, we can see the various factors like growth rates and growth rates of national income, then the interest rates fixed by the apex authorities, inflation rates, one of the major factors which is studied by the investor, then economic forecasting will be looked into, then exchange rates, another important factor which the investor will look into. All these factors will be studied in detail by the investor. Based on this factor, investor will analyze whether the economy is in a booming stage. If the economy is in a booming stage, for sure the company will be in a growth stage. That is, there will be more demand for the goods and services, there will be increase in the price, etc., etc. So based on the economy only, the company will depends. So if the economy is in a booming stage, company will be in a booming stage, likewise vice versa. So that's all about in economy analysis. Then coming towards the second part of EIC, which is the industry analysis. Industry is the main sector to which the company belongs to. So for studying that sector, we have to look into various factors, and the investor or the analyzer have to use various methods like pest analysis, political, economic, social, technological analysis. SWOT analysis can be followed by the investor. Then another main type of industry analysis is Porter's FIFO's model, also can be used by the investor. Mainly in industry related factors like the attitude of government towards the industry's share price, demand for the products in the industry, future growth prospects of the industry, all the industry related factors will be studied in depth by the analyzer or the investor. That's all about industry analysis. Coming towards the most important part of EIC framework, which is the company in which the investor is planning to invest. So companies' growth prospects, companies, all aspects should be studied by the investor before investing. Mainly the profit earning capacity of the company, the product supply of the company, supply chain management, the demand for the product, then all the industry characteristics which the company belongs to, corporate profile of the company will be studied in the company analysis. And out of all this analysis, the investors will be coming down towards an intrinsic value, which is the fair market value for the share of that company, and that fair market value will be compared with the market price of that share, and based on the value and the market price, investor will decide whether to invest or not to invest. That's all about fundamental analysis from my side. I hope it's clear. So thank you all for listening.